Good afternoon. My name is Karen Gala. I am the Executive Director of the Council on Food, Agricultural, and Resource Economics, and we're very pleased to have you here today for one of CFAIR's and the USDA Economist Group summer webinars in the summer webinar series. So we'll hope that you keep posted for the other webinars that will come up. The mission of the Council on Food, Agriculture, and Resource Economics is to enhance the effectiveness of the food, agricultural, resource, and related economic sectors through a stronger national presence of the agricultural and applied economics profession by identifying key economic issues, connecting those who work on those issues in the profession with those who make decisions about them, and also in generating greater interest in and support of public research, education, extension, and outreach, and academic programs related to that information. Without further ado, because we're on a tight time schedule today, I will move the presentation over to Chris Burns, who is partnering with CFAIR through the USDA Economist Group to provide you with this great learning opportunity. Thank you so much.
Great, thank you, Karen. My name is Christopher Burns. I'm a research economist at the Economic Research Service. It's my pleasure today to present or to introduce two ERS researchers who are in the Markets and Trade Division, Elizabeth Gooch and Fred Gale, who are presenting a webinar entitled Chinese Overseas Investment in Agriculture. Between the two of them, Liz and Fred have been working on issues regarding Chinese agricultural investments and related issues for about 20 years combined. Fred alone has been working on this issue for 17 years. And before I turn it over to them, I just want to quickly tell you about the USDA Economist Group. We're a group of economists and researchers in the USDA. But we also have outside members who are not affiliated with the USDA, and we like to promote and educate people on important issues that the USDA is working on to help increase public awareness and increase the level of debate on important issues. You can check out our website, the USDA Economist Group .org. It's available online, and you can join us for, I think it's $20 is our membership fee. So without further ado, I'm going to turn it over to Liz and Fred, who are going to present their webinar today.
Hi, my name is Elizabeth Gooch. I'm an economist at ERS, Economic Research Service of the USDA, and my areas of interest in research have been focused on Chinese overseas investment, Chinese dairy supplies and trade, and then I've done some economic history work on the Great Chinese Famine that occurred between 1959 and 1961.
I'm Fred Gale. I've been at the Economic Research Service for 29 years now, working on various topics, and as Chris mentioned, I've been working on China for 17 years. And my work covers many different aspects of Chinese agricultural trade and issues within China, including food safety and credit, various commodity markets, and Chinese agricultural policies. And I've been involved in activities like the WTO case, which is challenging China's domestic support and its import quotas for grains.
All right, so we'll start our presentation. The title is Chinese Overseas Investment in Agriculture, and Fred and I have been working on this for 3 years, and a lot of our information comes from Chinese government documents, media, other secondary resources on investment. To show the highlights, we broke them into there are four main things we'd really like people to take away from this paper. And the first one is that the agricultural investment has grown tenfold in 1 decade. And this growth parallels China's emergence as a major importer of agricultural commodities. So those are the first two, about why this is happening. And then the third thing is about the strategies. And in the beginning of their outbound investments, they were more focused on farming and raw materials, and the strategies have changed and shifted towards business acquisition. And finally, China also includes technical assistance in their overseas investments. To give a summary of 2016, the Ministry of Agriculture presents that there were 1,300 foreign investments by Chinese companies in forestry, fishing, and agricultural ventures. And together it was valued at $26 billion in that year, and it went to over 100 countries. And to put that in context, here we've presented the overseas investment amount in agriculture between 2003 and 2016. And you can see that it was fairly small until around 2008. And that's when some Chinese government documents, the Medium and Long-Term Food Security Plan and the number one document in agriculture, encouraged outbound investment in agriculture. And since then, it has grown. The new data in 2017 shows that there's been a 25% decrease since 2016. So in 2017, it totaled $2.2 billion. But in 2017, there's also government documents encouraging outbound investment in agriculture. I also want to show you the shift in strategies. In the early part, as I said, it was more focused on land purchases and growing crops overseas. But what we found in our research is that the strategies have broadened and changed. And now they focus on food safety, technology acquisition, distribution network, branding of commodities, access to the full supply chain, foreign aid, and supporting the Belt and Road Initiative.
Okay, this is Fred Gale. I'm going to pick it up from here and finish the presentation. The next slide here is showing that China's investment in agriculture is really worldwide. It's all over the world. Later we'll look at the various regions, the concentration. But China is really casting a broad net in these investments, and they focus on different commodities in different places. And in the United States, in particular, the most prominent investment, really of any investment, one of the two top ones was the acquisition of Smithfield Foods in the United States in 2013. China also has smaller investments in growing alfalfa in western United States, dairy, and sourcing grain from the Midwest. But each continent has Chinese investments, and they vary widely. They're very diverse. As Liz mentioned earlier, there's a broad strategy which includes many different objectives for these investments, so it's very hard to describe them succinctly. But one goal is for these investments to profit from and diversify sources of Chinese food imports. As China becomes a major food importer, Chinese companies and Chinese officials want Chinese companies to profit from those imports. There's also investments to build goodwill and to project China's soft power abroad by sharing technology and creating markets in China for other countries, especially developing countries, to export to China. And that's part of the Belt and Road, One Belt, One Road initiative that was referred to briefly earlier. China also has a strategy of investing in ag trading and logistics and services to challenge the perceived dominance of major multinational grain trading companies in the markets. And that's a part of what was also mentioned earlier, of gaining control of the whole supply chain. And then lastly here, another objective is to acquire technology. Really, it's to exchange technology, because China has needs to bring in technologies like seeds, which is China's biggest acquisition yet, is the purchase of Syngenta, the agricultural technology seed and chemical company based in Switzerland, which is prominent in seed development. And other types of technology, animal breeding and farm chemicals, veterinary drugs. China is also eager to acquire these technologies to upgrade their own agriculture. But China also is casting itself as a provider of agricultural technology to, again, developing countries that need, for example, their rice production technology. And again, there's an overlap between these major initiatives. One is what China calls Going Global, FDI initiative, which started in the 1990s and was really, agriculture was folded into this initiative by 2005, which is an encouragement for Chinese companies to go outside of the China market and become globally competitive companies. And then another more recent initiative on the right is the One Belt, One Road initiative, once again, which is really associated with President Xi Jinping and was proposed originally in 2013. It's been called the Project of the Century. There are trillions of dollars of investment involved. It includes 60 plus countries, and China wants to use this as their strategy for promoting their version of globalization, to promote global trade, investment, and cooperation, exchange of technology. And the One Belt, One Road project centers largely on transport, especially transport infrastructure and energy, acquiring sources of energy. But agriculture is also a smaller but also significant component. And this One Belt, One Road strategy focuses a lot on developing countries in Central Asia, Southeast Asia, Africa, really any country. And many of these countries are agricultural countries. And so China is using agriculture both as an investment opportunity and as a corridor for cooperation. And these two initiatives, the Foreign Development Initiative and the One Belt, One Road initiative, overlap to a great extent. So it's hard to really separate the two. Another overlapping phenomenon here is the overlap between commercial objectives of companies that are doing the investment, because almost all of this investment is done by companies, Chinese companies. And national objectives, the objectives of the government or the Communist Party. These kind of objectives can include national food security, which is a major issue for agriculture, as well as technology issues, cooperation, diplomatic objectives. And these two intersect to a great extent and to varying degrees in this foreign investment program. And again, the overlap between company objectives and government objectives is difficult to discern in state-owned companies, and then also in private companies in China. And this slide shows an example of the company that acquired Smithfield Foods, Shuanghul Development Co. That's their branch within China, pork producing company. This shows some pictures from a visit to one of their branch plants last year. And there's a lot of overlap here in some of these slogans that are on the wall, like creating a Chinese meat brand and creating food for a new century. There's a mixture of what the company hopes to accomplish and also kind of nationalistic objectives that the company is supporting. And at the picture at the bottom was propaganda that I hadn't seen before when I visited this company before. And when we first got out of the car, there were these giant Chinese characters that say, "Do well in building the Communist Party." And that was something I hadn't seen before. And inside the plant, there was a lot of posters explaining Communist Party propaganda and objectives. Okay. Yeah, next slide here is going back to the regional breakdown of Chinese investment in agriculture. And this data information is actually quite hard to get. I only found it for 1 year in a Ministry of Commerce report, but I think this reflects the general breakdown that most of China's investment is in neighboring countries, and this chart shows that half of this investment in agriculture was in Asia in 2014. Another big chunk this chart shows is in Europe, 15% in Europe, but most of that investment in Europe, I think, is in Russia, which is another neighboring country. And Eastern Russia in particular, which is just over the border from northeastern China, Manchuria, has been a big target for Chinese investment. So until now, most of this investment has not gone very far afield. Most of it has been in border countries and in smaller countries. It's been largely under the radar. Another big target has been Africa, which Africa has a big technical assistance component to the agricultural investment there. And a lot of the investment is in technology parks, model rice farms, and there's a very interesting mix here, again, of commercial and national objectives where technical assistance projects are almost always operated by companies, and they're subsidized for 3 years, and then they have to find a sustainable commercial way to continue the project. And then Oceania, which is mainly Australia and New Zealand, is a major target for Chinese companies who are looking mainly for commercial opportunities in dairy is probably the biggest one, as New Zealand is China's largest dairy supplier imports. Also beef, other livestock enterprises like sheep. And then commodities like sugar and even wine that they're looking at in Australia. And then the Americas have been a relatively small target for agricultural investment. And North America, which includes the U.S. and Canada, only has attracted 2% of China's investment. So there hasn't been that much agricultural investment in the United States, although the United States has been a major target for investment in real estate and industry. We have our train going by outside of the train track. In Latin America, there's also been a lot of interest because Brazil and Argentina and other Latin American countries are major suppliers of China's commodity imports. But so far, there hasn't been that much investment directly in agriculture. Let me just go forward here to an example of a real estate website in China, which features plots of land that Chinese companies can acquire, either by renting or by purchase, I think, in eastern Russia and Siberia, which has been a major target. And this is so common that there's a website featuring numerous parcels of land that Chinese companies can try to acquire. This also kind of crystallizes one of the issues that Chinese agriculture is facing, that within agriculture, it's actually very difficult to get a large plot of land because of their land ownership system, which is under collective ownership, and you can't freely buy and sell land. But Chinese companies can go to places like Eastern Russia or Africa or Eastern Europe and acquire large plots of land and do farming on a very large scale that they could never do in China. So this is partly an outcome of China's institutions at home. This is going back to this slide, going back to China's relatively few investments in the United States. There's a company that called the Rhodium Group that tracks Chinese investment in the United States in all sectors. And I pulled out the investments that they had listed in agriculture. And there's actually not that many. In recent years, there's only been about one or three per year. I think there were, again, two or three in 2017, which is not shown here. And these investments are relatively modest in value, $15 million in 2016, which is very small. And the one investment that jumps out here is in 2013, where the investment was $7.1 billion. And that reflects the acquisition of Smithfield Foods that year, which is by far the most prominent investment in the United States. And after that Smithfield acquisition, the Chinese acquisitions in the United States have been relatively thin. I'll just wrap it up here now in this final slide. Just overall, China's investment in agriculture is really playing pretty much a marginal role in agricultural trade at the present. But China has much bigger plans for this investment to play a bigger role in agricultural trade in the future. They hope to use it to diversify their sources of their sources of imports, agricultural imports, which transitively means that they'll reduce their reliance on the United States as a supplier of imports. They hope to use this Belt and Road initiative to boost trade and to create new suppliers of agricultural imports, largely in the developing world, by taking advantage of unexploited resources, they think. So China's thinking long-term about this. Right now, this is a relatively small venture overall, but China's thinking that it wants to use this as a major project to change the world and to give China more access to imports. And then the second bullet here, again, is that China's objectives are both geopolitical and commercial. Again, there's a mixture of, there's companies carrying out the investment, but those companies are also expected to support national goals like maintaining food security as part of their commercial investments. And when they make these investments, they are expected to make money, but some of the investments also have these non-commercial objectives that may make them difficult to make them viable commercially. So there's a lot of the investments have actually been disappointing early on and haven't really made as much money as the Chinese investors expected. And partly that's a mixture of these objectives that may sometimes sacrifice the commercial to achieve the political. And the third bullet here is that the strategy is fluid and it can change shape very quickly. What we've written in our report is what was true last year, and even as we were writing the report over the last 3 years, the strategy was changing, and we made a lot of revisions of the report during the process to reflect these changes, even during the final stages. So what we've reported so far is more or less true now, but everything could change in the future. And China's making adjustments as it encounters problems and difficulties. And even since the report has come out, there have been initiatives announced by China to try to tweak some of these investment strategies to try to make them more commercially viable and more focused and address some of the problems that they've encountered in the past. So it's changing all the time. And in our report, in our presentation, we said they were emphasizing the One Belt, One Road initiative and trying to diversify away from the United States. But with the current recent tensions with the United States and negotiations, there's actually some new articles and propaganda coming out of China, or directed to the Chinese audience, actually saying that that agricultural trade with the United States is actually a good thing that's beneficial for both sides. So it's really a change in rhetoric, really almost overnight, that happened last month during these negotiations. So there could be changes coming on the horizon. And finally, the last bullet on this slide, we're looking to what the effect of China's investment might be. And again, it's not, it doesn't seem to be a major game changer right now. But to look at a precedent for evaluating, if you look back at Japan's investment in earlier decades, when China did this, Japan pursued a very similar strategy of trying to diversify their investments. They became an importer and trying to develop new suppliers, and Japan invested around the world as well. And there was some anxiety on the part of the U.S., including ERS analysts, about Japan's foreign investment in agriculture in previous decades. And it had some effects on world trade and on investment and the players. There are now major Japanese companies that are agricultural trading companies, and Japan had a role in developing Brazilian soybean production early on in earlier decades. But Japan is still one of the most valuable markets for U.S. farmers, despite all those concerns many years ago. And it's most likely that China also is going to continue to have a complementary role in agricultural trade with the United States. And China will be a major market for U.S. farmers into the future, despite all these maneuvers that the Chinese are making. And so that is basically our presentation of our report as it stands right now. I think Karen is going to show you how to find the report itself. There it is.
Yeah, so I brought up on your screen the website for the report. So if you just Google Gooch and Gal and Chinese foreign agricultural investments, then you'll find it. It was put online last month. So the changes that Fred mentioned that have been happening in China, have happened within the last month, as far as the dynamic nature of how they're responding domestically to different agricultural strategies. But I wanted to open up the opportunity for you to submit your questions. And so you can either do one of two things. You can remain anonymous and submit your questions through this form that I have now on the screen, or you can also raise your hand and just ask a question directly to Fred and Elizabeth if you wish. So are there any questions, initial questions? All right. Dan Campbell, I see your hands raised, and if you could ask your question, you're off mute.
Okay, I just sent it too, but conversely, how much investment does U.S. have in China? Anything comparable like what they have in the U.S.?
I think if we exclude Smithfield, which is an unusual case, I think there is more U.S. investment. Well, there definitely is more U.S. investment in China than the reverse. And I don't know how to quantify. I haven't seen anything that actually quantifies the investment. And this has been a point of tension with China, where China has restricted investment in the past. They're gradually opening up more sectors of agriculture to U.S. and other foreign investors. And so, for example, it's very difficult. I don't think a foreign investor cannot own a farm in China unless, in many of these sectors, they have to be a joint venture where the Chinese partner is the major holder. So that there's not very much investment. There is significant investment in poultry, for example, and then many of the input industries, like all the major companies are active in the seed market, although their actual participation is restricted. And many companies are involved in, say, animal breeding and equipment for farms and farm equipment, and then as well as much of downstream in food manufacturing and food service and retail, such as Walmart, for example.
Okay, great. Elizabeth, I have a question for you, and that is if you could describe a little bit more about how the food safety issues have shown up in your research as of late. You mentioned that on one of your slides earlier on.
I would say the best example of that is one of the best examples of that is in dairy. So after the melamine event in China in 2008, the Chinese dairy sector really had a lot of trouble with public trust. And since 2008 is when the Chinese companies have been going to New Zealand and starting ventures, both brownfield ventures, where they purchase like a dairy that's kind of going downhill or isn't producing that well, and then setting it back up for production and export, and sometimes export back to China. And then also they've started some greenfield investments where they're building whole new plants and processing facilities for milk powder and infant formula. And so why that's food safety, it's also branding, is that now there's a Chinese company exporting New Zealand quality dairy, which also communicates New Zealand quality food safety. And that would be one example. Do you have anything to say, Fred?
There's a lot to talk about. I've been working on food safety in China for many years as well. Yes, but one of the big food safety concerns in China was with pork, actually, for many years. That was a concern. And we don't really know exactly why the Chinese company bought Smithfield, but there was speculation that was also partly motivated by food safety. But I also mentioned that I'm involved in another project now where I'm looking at the kinds of food imports that China is rejecting, where China itself is has been trying to upgrade its food safety standards and its laws and the implementation of its laws. And they've been taking a lot of measures to do that. And they've been actually rejecting a lot of imports from the European Union and the United States. I think they're the top two countries that are affected. And that's largely because China has tried to deal with these food safety problems, like what Liz just mentioned with the dairy has been really the biggest one. And there's been a lot of Chinese consumers have been actually going out and looking to buy imported products because they're safer. And then the second round of that is that people have been coming out of the woodwork and selling fake imported products. That has become a major concern. And so now the Chinese authorities are trying to crack down on imported products to make sure they have all the proper labeling and paperwork and ingredients and contact information. And so this is now raising a new hurdle for exporters to export food products to China that are getting caught in that net where their food products are getting rejected because they don't have the right labeling or the right paperwork, or the Chinese find all kinds of different chemicals and substances in those foods. So it's a very interesting new chapter of the whole food safety story.
Thank you both. How has access to Chinese markets for the United States been a subject for retaliation or targets in the recent trade war?
Not really part of our paper.
Yeah, it's not really part of what we look our report, and this is there's ongoing very sensitive negotiations with China ongoing right now, so we can't really say anything about that.
Okay, fair enough. Do you anticipate that the capability of the Chinese to manage, centrally manage information and data, will that be something that will influence how they build markets in the future?
Yeah, I think the Chinese have very big plans for this. In fact, they have big plans to try to collect vast amounts of information, including about agricultural markets, and then use it to integrate it into what they hope would be a seamless system. I was just at the China's Agricultural Outlook conference in April, and they made presentations about their plans in this area, and they already have a high-tech room which has covered with video screens showing different prices and weather conditions and video of loading docks, all kinds of things. So the Chinese have very big plans to utilize big data and artificial intelligence to upgrade their ability to analyze markets, and it's very ambitious. There's a little, I think, of difference here in that China has access to this data, or at least they hope they do. I think they have probably some of the same struggles where much of this big data, like collected by tractors and greenhouses, sensors, greenhouses from drones, is proprietary. But the Chinese hope to be able to collect all this data and have real-time analysis. I think they're probably going to encounter challenges as we do. So, in fact, I have an example of this right now, where a Chinese team from Chinese government team is asked to come over and see how the USDA does this. Actually, we don't have a lot of the things that they're asking for. I think they don't realize that a lot of this big data is proprietary in the United States, and it's very difficult for U.S. government to get access to it. I think they don't realize just how difficult it is to implement this kind of market analysis tools.
It's very, very interesting. Thanks, Fred. So we have time for just one more question. We're going to try and end on 12:45. And the question is, can you expand on the kinds of investments besides Smithfield that China has in the Americas? Is it more research and development investment, or is it land rental like it has been in other places?
Again, it's really hard to characterize them. And so in the United States, again, there's only been a handful of investments, and so far the Chinese are not really engaged too much in farming in the United States. Another thing that part of our report that I didn't mention is that we looked at the USDA statistics on foreign ownership of farmland, and the data is not quite up to date. It's through 2014, but there's actually not that much Chinese ownership of U.S. farmland at this point. And as far as investors from mainland China, most of that, the farm ownership is land, the farms that are owned by Smithfield, actually. Another aspect that's important we touched on is in China's involvement in the supply chain, or in the trading of grains and oil seeds, for example. Chinese companies have been made it a priority for a number of years to try to gain access to the supply chain, different aspects of the supply chain for soybeans, which is their largest import. And they've mostly targeted South America. There have been a series of companies that have gone into Brazil and Argentina mainly to try to, first they tried to farm in those countries, but that didn't really work out. And they had some conflicts with local governments over differing expectations. But one of the biggest investments after the Smithfield deal is China's state-owned food company, COFCO, acquired two trading companies called Nadera and Noble Agri in 2014. And through these two acquisitions, they were able to acquire the assets of those companies, which included a string of ports and warehouses and grain sourcing capabilities throughout Brazil, Argentina, as well as the Black Sea region of Eastern Europe in one fell swoop. And they were able to get access to these assets to gain control of the more control of the supply chain, the distribution of grains. There's only been much smaller investments in the United States in that area. There are a couple of joint ventures between Chinese companies and a cooperative and a grain trading company. But that's another important aspect of China's overall strategy, is to get control of this supply chain so that they can have they can move from being a passive importer to being a more active importer that plays an active role in the global market.
Mm-hmm. Okay, well, we're at the end of our webinar time, and so thank you all so much for joining us. Thanks, Chris, for assisting with the coordination of this, and Fred and Elizabeth for presenting. This information is invaluable, and there's a lot of information on the ERS website, the Economic Research Service. Many times you'll see their graphs and information in the popular news press under the auspices of USDA. The Economic Research Service is an invaluable service to our nation, and we really appreciate the information shared by the two of you today. If anybody has any additional questions, feel free to reach out to both Fred and Liz. Their information is valuable and was linked in the invite for this webinar. Thanks again, and we'll post this. We'll send this link out to you shortly so that you can review it and have it for your records. Take care. Bye-bye.